I'm going to, guys and girls, good evening. How are you? I hope that you are well. I should say good morning, good afternoon, good evening, wherever you are in the world. I'm going to grab my share function here, make sure that you can see my slides. I'm going to grab the chat function as well. Let's make sure that everybody can chat to everybody. And can I do, guys, on that note, can I do a quick sound check? I'm just checking literally checking the NASDAQ chart as we run in the background. So we're all good. G'day, Rod. How are you? Hope you're fantastic. Jeff, Diane, how are you? Mark, hello, hello. Dave. So we look like we've got good technology. So cameras are working, lights are working, mics are working, the internet is working. Terry, how are you? Hope you're fantastic. So guys, we're on for a really, really good little day. Now the reason I say that, obviously today, guys, we've got the 5th webinar in our series of webinars. Daniel, hope you are absolutely brilliant. We are in webinar number 5. Guys, last week we spoke about reversal patterns, and that was kind of good fun. Today we're going to be doing, guys, the next trade in the series. So you generally find the market will move in 3 phases, as we did in one of our original webinars. Luca, how are you? Luca, your surname is almost like Ferrari. I saw that in my bottom, literally out of the corner of my eye. I'm like, oh, is that Luca Ferrari? But so obviously not. But hello, mate. How are you? I hope you're fantastic. So, guys, we're going to do a quick. I wish. So I want to do a quick country check, guys. A quick country check. You are Italian, Luca. Well, fantastic. Suzanne, how are you? Guys, we've clearly got Australia. We've clearly got Australia in the webinar tonight. There's no doubt about that. We've got Singapore. So we've got Singapore, Western Australia. I think Western Australia can probably be a country in its own right. Young Keith, it's probably big enough. So lots of Aussie. We've got lots of Australia. We've got lots of Netherlands. So we've got Netherlands. We've got people from Sweden. This is good, guys. I know I've got one of my American traders, guys, Andrea, I believe, is logging into the session as well a little bit later on. Because the reason I asked that question is that not only is trading a global thing, but we can basically access these markets 24 hours a day, guys. And what does make my webinar very, very simple, very, very simple today is, again, we're going to be going to the live charts, as I always do. I was going to say, Dave, so as I finished the live trading room session this afternoon, and I said, if you want to wait for a trade, wait for the hourly turn and then take the trade. And the hourly turn on the NASDAQ, I can actually show you the hourly turn. Okay, so my traders are bopping along. I was doing what they need to do. Can everybody see? So that's a live NASDAQ chart. Nice. That's a live NASDAQ chart. Can everybody see this tiny little -3 just there? That tiny little -3. That basically, Lou, hello. That basically says that the sellers have run out of steam. And look where the market turned. As we talk about the market turning on the hour, okay, so literally 6 p.m. Tokyo time, right there. Look at when the market turned, and it ran beautifully. Now, what's the bet? Okay, what's the bet? It's 7 p.m. literally right now. And what is the market doing? The market is turning, otherwise known as the hourly turn. Now, I joke about the hourly turn because, again, quite often when I'm running the live trading room, it's a really, really busy job, right? But so what I do with my wife is after the live trading room, we basically grab the hourly turn. So we grab the 6 o'clock, 7 o'clock, 8 o'clock, 9 o'clock, and 10 o'clock. Then if we're even a little bit more as adventurous, we roll into the US Open. So anyone in the webinar today, if you want me to run you through, we won't do it in the webinar today, but if you want me to run you through how to trade the US Open really, really well, I actually wrote a trading plan for the S&P 500 and the NASDAQ, guys, in 2009. And if you used that plan last night, it still went really, really well. So you can imagine if you write a trading plan in 2009 and it's still working in 2024, what does it ultimately mean? As it ultimately means that the market hasn't really changed the way that it moves. You know, it's obviously more valuable than it was in 2009, sure. However, as the markets don't change the way they move ultimately, and that means you can actually get very, very good at what you do. That's what we're going to be doing today. Now, all of that, perfect, guys. I've got Zan. Hello, Zan. How are you? Hope you're brilliant. Ahmed, you just got out of the trade with +20 and +30 on the NASDAQ. So There we go. So guys, we're going to get on with it. Now, I do love that slide, guys, how to get started as a professional trader. I do absolutely love that. Now, part number 5, guys, we're into webinar number 5. Okay, and we're going to be talking about bias switches. Now, that in my language, it's called a bias switch. Guys, please don't get caught on that. It's not a buyer, as in the buyers in the market. It's not a bias switch. It's a bias, which means that effectively the market is changing its bias from a selling bias to a buying bias. Or you could actually say the momentum of the market is moving from sellers to buyers. Now, it doesn't matter how many times I say, please don't get that confused with buyer. Someone does. So guys, we're going to call it a trend change trade. Okay, so literally tonight we're going to be trading trend changes. Now on the NASDAQ, guys, this afternoon, live charts, there's been 3 trend changes. So we're going to go through those trend changes for you. I'm going to show you exactly where you should have entered, why you should have entered, how far you should have held the trade for, where your risk should have been. And we're going to try and do all that inside 60 minutes. And then as we can have a play in the live charts and make sure that everybody everybody's ready to rock and roll. Now, guys, in terms of this is webinar number 5 in the series. If you need webinar number 4, 3, 2, 1, guys, they're being hosted on the Trading Pit YouTube channel. So please do jump on that. Guys, one thing we are going to focus on tonight is underneath that little title there is how to use the rule of 3 and the step of the market to hunt super high probability trades. So we'll reflect on some of the stuff we've done in the previous webinars, but the flip side, we're going to focus on a completely new signal set. Guys, my target, if you will, for the webinar tonight is literally this simple. We want to understand, point number 1, we want to understand that a bias switch trade does confirm the fact that you're in a long range reversal. So we did reversals last week. We're going to now sort of layer a little bit of information on the top of that by talking about the bias switch or the trend change. Now, guys, that being said, point number 2, these trades are generally the first major trade traded with the stair step of the market. All right, so as we said last week, reversal trades are always traded against the step. The bias switch is the first major trade that is traded with the step. Right now, I'll show you in the charts when we get in there. Now, point number 3, guys, the bias switch trades are typically traded in the second phase of price movement. I'll show you that in a second. And finally, guys, the bias switch trade allows you to accurately use Fibonacci to work out how far the trade is going to go, which means ultimately, guys, you get to maximize your profit on every single trade if you know what you're doing. Now, those little 4 keys there, they are the 4 keys to super high probability bias switch trading. Now, interesting point, guys, we'll have to do some what we call in Australia, guys, we call them CCNs or customer caution notices. Because we are going across multiple jurisdictions tonight, guys, I'm going to be as super careful as I can and cover all jurisdictions. So both US, European, Australian, Singaporean jurisdictions, UK jurisdictions, all in one go. So that said, guys, we are going to be talking about trading futures tonight. I will also mention CFDs. What we do need to be aware of, guys, is that trading does involve risk. In fact, I need to define that risk for you. There's 2 risks when you start trading. There's a risk of making money and losing money every time you take a trade. Now, ironically, guys, we trade on margin. What does that mean? We borrow money every time we take a trade. So that does mean we can make money very quickly. We can also lose it very quickly. So what you'll find is that even as a futures trader, guys, I am a professional risk controller. So my focus for you tonight will be not only identifying the highest probability trades, but also showing you exactly how to control your risk on that trade. Now, mind you, as a byproduct, if I can, a byproduct of picking super high probability trades is normally the risk management is done for you by the market. Okay, now, what do I mean by that? In the live trading room tonight, as we had up to 5 trades on the NASDAQ and every trade went through its target. Now, why did every trade go through its target? Well, the reason that every trade went through the target is because we let the market do the heavy lifting. What does that mean? We let the market generate a high probability signal for us, and then we just went and took the signal. So part of, guys, or a very, very key sort of ingredient of your risk control strategy is actually picking ultra high probability trades. So if you're picking trades that typically run at a 90 to 95% strike rate, as you probably won't need your stop loss ever in your career, except maybe once or twice. And it's okay, guys, it's okay to have a losing trade, I suggest. It's okay to have a losing trade. The flip side of having a losing trade, guys, is what we want to do straight away. So if we do have a loser, we want to identify why it was a loss and immediately put in a measure in order to make sure we don't do that again. I can talk about that, guys, if we need to. Now, that being said, information tonight in the presentation is general information only. I was in the past performance of any financial product, guys, in the jurisdictions I mentioned before. We can't use past performance as an indication for future performance. Now we've done that, guys, now we've done that. For those that I have not met before, a very, very long story short, I do come from a military background. So basically from high school, guys, straight to university, not being rude, but I was watching the university lecturers thinking, you know what, am I training to be you? Oh, tough gig, I don't want to be you. So I decided, guys, a Black Hawk helicopter flew over the university. A guy was hanging out of the helicopter with a mask and a sniper's rifle. And I thought, you know what, I think he's having more fun than I am. So I vanished off the face of the earth for 15 years, guys. It was absolutely incredible. What that does mean, guys, what that does mean is I have a fairly military style presentation. I should say I have a fairly military presentation style. So pretty well get straight to the point. As we say in the army, guys, no fluff, no bubbles. I'm just going to get in. I'm going to show you exactly what to do. We're going to go and look at the live charts. We're going to confirm exactly how much money you would have actually, exactly how much money you would have made tonight. Guys, and I think that sets the foundation for an absolutely phenomenal webinar. Now, in my journey, Daniel, in my journey, interesting point, I have had the opportunity to be published, guys, now in multiple countries, in multiple languages. Guys, I've had an opportunity to speak on stage with Donald Trump, Robert Kiyosaki, Richard Branson, T. Harv Eker, the Wolf of Wall Street, la, 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 la. I've actually been speaking internationally, guys, on trading since 2009. All right, so it's been quite a journey. I'm an international bestseller. I'm working on another international bestseller now. All in all, guys, I've been trading for a little while, but I love also the teaching side of trading. Guys, now some people, Lucky, why do you love teaching? I love teaching because I love empowering people to discover a different life, which is trading. I also love teaching because by teaching, guys, and doing a really good job of teaching, what I'm actually doing is I'm actually proving that the trading strategy works every time I run a webinar. Here's the signal, here's the stop, here's the target, here's the Fibonacci. Now, I really do love presenting off live charts, guys, because you get to actually experience what is it like to be not only a futures trader, absolutely brilliant, but if I was to jump into Lockie's trading room or I was to follow Lockie's strategy, guys, what is my expected performance? I do think that's a really, really exciting thing. So all in all, as 1st of August, I discovered futures trading. I was actually at Macquarie Bank at the time. I was being trained as a professional bank trader. Macquarie Bank was probably one of the best organizations I've ever worked with. 1st of August 2009, I basically launched my first trading school. That was primarily, guys, because I looked around Australia and there were no good trading schools. And I thought, you know what, I'm going to have a crack. There were a lot of really dodgy trading schools. So dodgy is an Australian, that's an Australian expression. There were a lot of really, really not very good trading schools, and I thought, you know what, I'm going to actually start my own, and I'm going to do a really good job of it. And here we are, guys. What 2009 to now, more than 15 years later, guys. February 2010, I basically launched the foundation of the strategy we're going to be talking about tonight. Effectively, then I launched some indicators to help us trade the strategy, which I'll show you tonight. As I started speaking internationally in 2011, I've had the opportunity to speak in 22 countries. I did have an opportunity to work with the big man, as Donald Trump. And now, regardless of your political persuasion, I have a sneaking suspicion that he may be returning to the presidency. Now, please don't throw cans of tomatoes at me over the internet, but I think he will. What does that ultimately mean? As if we do get Trump back or somebody like Trump back, whatever it is, as we're looking at 3 to 4 years of absolutely stunning trading. All right, so forget the political side of Trump. I don't like Trump, grumble. That's okay. We are, as you and I are right now, we're staring down the barrel of 3 to 4 years of absolutely stunning trading. So if now's the time to jump into the game of trading as a futures trader, guys, absolutely brilliant. At the end of 2023, I moved to Japan. I was invited to join a company out of Singapore called DOURO Trading. They have been incredibly brilliant. Guys, they have been so supportive, and here I am talking to you all over the world. And guys, it's going to be a very bright year. 2024 is going to be really exciting. Now, what we're doing is we're going to be talking about a buy switch trade. I will also call it a trend change trade because that generally makes more sense to more people. Now, what we're going to be doing is I always present in context with live charts. So we are going to focus on the NASDAQ tonight. Guys, the NASDAQ has a really, really good little market to not only pick up 3 or 4 good little trades in every trading session, of which there are 5 trading sessions a day. Guys, but the NASDAQ's got a $5 tick value. What does that mean? You don't have to start with a lot of money, or you could be really smart and get funded. Guys, hint, we're presenting with the trading pit tonight. They fund traders, so there could be a little tip there. Guys, get going. And the beauty of being funded, guys, the beauty of being funded is if you've got a $5,000 account, you're probably going to trade really nervously. But if you fund it at $100,000, the psychology of that is very, very different. So I had more than 50 traders in my live trading room today. I'm encouraging every one of those traders to be funded, because if you are funded, guys, even at the $100,000 mark, it does mean you trade with significantly less nerves. So it actually means you can get on with the job of mastering the art of trading as opposed to mastering the art of being nervous. Okay, now, as a question for everyone in the webinar, has anyone ever been nervous taking a trade? Has anyone ever been nervous about winning money, losing money? Oh my gosh, is that a valid trade? I wonder if there's, am I the only one in the world? G'day, Ali. So Ali, yes, of course. Lou, of course, never. All right, so got Lou in the webinar tonight, Trading God 2.0. Lou is amazing. Rod's never got nervous. So my point being, guys, my point being is that humans are we're naturally dramatic beings. All right, we're naturally emotional people. That's just who we are. It's our nature. So understanding that we're bringing this organic tendency to be emotional into trading, how do we escape the emotion, guys? How do we get away from the emotion? Guys, we've actually got a very, I'm just looking at the names list. So no names, no pack drills, but we have a cage fighter in the webinar tonight. I have a sneaking suspicion that that particular person would have been nervous before the start of a fight. Guys, now I'm not going to name him. I'm not going to name him, but we do have a cage fighter with us tonight. So please don't annoy him. otherwise there might be retribution. Well, my point is, guys, human emotion is normal. Human emotion is normal. The way to address emotion in trading, the way to be really, really confident about what you're doing, the way to be confident, guys, about what you're doing is to be very, very confident about what the market is telling you. All right. So that's when we basically hand over our signal definition to the market. Now, guys, right throughout my trading career, I've said to everybody, the markets are a beautiful beast. Okay, they move up and down every day, and all we want to do is actually move with the ebb and flow of the market. We don't want to move against the ebb and flow. We want to move with it. So the fastest way to move with the ebb and flow is to define the ebb and flow. The fastest way to define that is to have a really, really good signal set. And that's why, guys, we are so heavily defined about where we get in and where we get out of the market. And I'm going to show you exactly that tonight. So very, very quick history, guys, very quick history of where this has come from. So the buy switch trades were actually the second class of trade that I was introduced to when I first started trading. So I first started on the reversal trade, and then I went to the buy switch trade. Now, both of those are effectively byproducts of what we call negative histogram divergence. What does that ultimately mean? The market is getting fatigued in one direction, so it turns around and goes back in the opposite direction. Now, in saying that, some points about a buy switch or a trend change trade. Because firstly, the buy switch trades are always traded with the step of the market. All right, so the stair step in the market, I'll show you how to determine that. Now, the buy switch trades allow you to confirm the trend of the market is changing. So the best way to do that is to wait for the candle to close and then decide whether you're going to be entering the market. What does this ultimately mean? Guys, we're letting the market do all of the heavy lifting. Now, we did a lot of work on that in sessions 1, 2, 3, and 4. So if you haven't seen 1, 2, 3, 4, please go and jump on those. Now, the third point there, guys, the buy switch trades apply equally to the 5-minute charts as they do to larger charts like the 4-hour chart and the daily chart for futures traders, guys, as they do for other trading disciplines. Now, it was only in the live trading room tonight, guys, that I was talking about the cryptocurrency Pepe, P-E-P-E. Now, some of you are aware, guys, that I bought Pepe a long time ago on a reversal signal on the daily chart. Okay, so I just want to highlight, guys, I won't go and get the Pepe price at the moment. What you call it, Pepe? I'm sure you call it Pepe. I think Pepe is sitting up around about 4% today. It's up around about 36% in the last 7 or so days. The beauty of that is I can grab the reversal strategy that I showed you last week on a futures chart, I can go and show you exactly that reversal pattern on a crypto chart, and it follows the same Fibonacci's, guys, which I just think is just quite amazing. Everything is working in this perfect rhythm. Now, what I do want to say, guys, last little point there, as we discussed last week, we always let the market do the heavy lifting. We always let the market give us the signal. Now, what that means, even for the newest of traders, guys, it means there's no rush. I said, please, you don't have to rush. There's always going to be a signal. There's no FOMO, which stands for fear of missing out. Guys, there's also no panic. Now, I wanted to quantify that no panic. The NASDAQ, guys, even in the current volatility, is generating around 60 trades per day using the strategies I'm teaching you throughout this webinar series. So you've got 60 trades a day. You only need 1 or 2 good ones to retire. Right. So if you spend some time with me, guys, you'll hear me say many times, please go slow to go fast. Okay, go slow to go fast. That means identify your favorite signal, identify the one that makes most sense to you, which is probably going to be the trade I'm going to show you tonight, because it's so obvious, so obvious. Basically, let the market do the heavy lifting. So in fact, you know, the beauty of that mentality is we let the market do the heavy lifting. We let the market generate the signal. The reason being is if the market makes a mistake, that's not your fault. Okay, that's not your fault. You know, therefore, we start to, everything we do in the game of trading is about building a positive psychology around trading. Now, a little bit of revision, guys, if I can, we're going to talk about the ABC principle for those people that may have missed the first 4 webinars. So a little bit of revision for those people that were here. Guys, we've got 2 teams in the futures game. It's got the green team versus the red team. So the buyers are green and the sellers are red. Now, this little pattern I'm building here for you on this chart is literally referred to as an ABC pattern. We can also refer to this as the stair step in the market. Guys, now, why is this important? Because a bias switch trade or a trend change trade, the trade we're going to be talking about tonight, is always traded with the step. Always traded with the step. Now, that little point there, this is called the breach point. Basically, if the buyers can close above that point, you know they own the stair step. If they can't close above that point, you would have concerns about whether they are strong enough to grab the stair step. That little circle there, goes down the bottom, that basically is referred to as the buyer's B point. You could also refer it, if you wanted to, as a seller failure point. Probably looking at it going, Lockie, it's a lot easier to call it a seller failure point. Awesome. The beauty of you being able to identify where the sellers failed. Okay, if the sellers failed there and you want to buy the market, where the sellers failed is an absolutely incredible spot for your stop loss. The reason being is that the sellers have failed there before, they're highly likely to fail there again, because everybody in the world can see the same thing at the same time. So a lot of the stuff I'm going to be talking about tonight, ladies and gents, a lot of the stuff is about effectively a self-fulfilling prophecy. Okay, the reason that the markets did what they did today, bouncing off what we call the evil twins, the reason we bounced off the evil twins multiple times today is because everybody believes the evil twins work. So maybe I should introduce you to the evil twins because they're lovely. Now, guys, let me comment down the bottom. Once the buyers close over the breach point, we say the buyers own the step. Now, what does that also mean? As we also say that the buyers have completed 2 buying steps in the market. So you've got literally the A and the C. The buyers are pushed into the market. Now, guys, we keep building this. So again, I love the yellow because it makes it really simple for me. We've got buyer step 1, we've got buyer step 2. Sellers are pushed back in again, buyers come back through. We call that D and E. And what you'll generally find is the market loves to move in 3 phases. So literally like green, 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 then the market turns and comes back the other way. So we actually refer to that as 3 steps in a stumble. And in fact, I tell you what, as I'm not kidding, on the live NASDAQ chart at the moment, all right, so that's a live NASDAQ chart. Let me show you. Okay, so he's bouncing up and down. We've actually Ahmed, well done. Ahmed, that's good job. Ahmed, you're probably long off that little green candle as a static bar reversal long, I trust. So those in the webinar are probably going, how does Ahmed know how to do that, guys? Some of my live trading room traders are actually in the webinar with us tonight, guys, just popping along. So if we have a look, guys, the market will typically move in 3 phases. Okay, typically move in 3 phases. Now, again, it's really, really obvious. We've got this phase here, So we call it 3 steps in a stumble. So you got 1, 2, and then 3. Now, there could be an additional phase down the bottom here, as there could be an additional one. So we might have had 4 steps in a stumble. Look at this on the way down. Look at this. Look at this. All right, so sellers sold the market down. Buyers bought it back. Sellers sold it down. Buyers tried to buy back. Sellers sold it down. So interesting point. Interesting point, if I can, obviously being a live chart. That -3 reversal we were talking about that occurred on the turn of the hour, fancy that, is after the sellers have sold down over 3 phases. What did we call that last week in the webinar? 3 steps in a stumble. So you've actually got the NASDAQ today selling down to the turn of the hour, and then it reloaded that static bar reversal, and they went long, all the way to the top of the jar. Interesting. So did we say before that the markets follow patterns? Well, that pattern, guys, the three-phase move, guys, we wrote that concept of a 3-phase move in 2009. Now, can you imagine if the market is still ideally moving in normally 3 phases, or maybe like a tiny little 4th one before it turns and falls away? Can you imagine that? Oh, wow, we could get really good at this. So what we end up with is buyer step 1, buyer step 2, buyer step 3. Now, again, we've got an additional breach point there. So every time the buyers close over that sort of stair step and confirm their breach point, guys, we know they're in command. Now, a very, very key message about this, guys, if I can, as I detailed in the 3rd webinar, the market, you know what, I've just shown you on a chart. But as I detailed in the 3rd webinar, the markets normally move in 2 to 3 phases. Now, the buyer switch trade is almost always in buyer step 2. Okay, so the buyers must own the step, guys, in order to get a buyer switch with the buyers or a trend change with the buyers. Same, guys, if we're getting one with the sellers, we need exactly the opposite to occur. Now, to bring this into context, guys, so to bring the graphic into context, what I'm going to do is put a downtrend over there on the left-hand side. So you can imagine, guys, exactly what has occurred on the NASDAQ live chart tonight. The sellers have sold down on the left-hand side. They've basically got to a point where they can't go any further. Then we've got a buyer switch long, and that's run on for a number of phases and obviously produced a lot of profit. So when I bring the graphic into context, guys, we're going to add the downtrend as I have. So once the buyers have taken the stair step, this is when we hunt for buyer switch or trend change trades. Now, interesting point, guys, on that, we don't go early. We don't go, oh, Lockie said there's all these rules, but, you know, there's 5 rules to a buyer switch, for example. I'm going to just follow 3 of them. Guys, wait for the market to do the heavy lifting, and then off we go. Now, in saying that, guys, the same applies to the sellers. This will be a little bit of revision, guys, from last week, but we can build on that as we need to. So just like we've got ABC patterns to the high side, we can have ABC patterns to the downside. All of the same principles apply. Guys, so you got your breach point on the pattern. That's where the sellers prove whether they're actually interested or not. Again, the buyers have pushed up. So a great way of putting that is a buyer failure point, a really good spot to put your stop loss. If they continue to stair step the market down through D and E, guys, all of the same principles just keep applying over and over and over again. Now, step 1, we've got step 2, we've got step 3. As once again, we need to actually give you an uptrend to bring that into context. So imagine the market's run up really, really nicely, which it did, guys, which it did earlier today. Okay, so let me show you. Actually, let me go full screen. This will be a little easier full screen. Okay, have a look at this run up over here on the left hand side. It's this huge run, huge run. And in fact, ironically, that's where the trend changed right there. Now we're going to come and have a look at this, but can everybody see the big trend indicator was green, and then it turned red. So basically green says the buyers are in charge. Red says the sellers are in charge. You're like, right, so now all I'm waiting for is the sellers to confirm they're in charge. Yes, and I'll show you how to do that in a second. And guys, you could have sold the market and just flopped all the way down here for about an hour and a half, which is absolutely brilliant. Okay, interesting point. Wonder what's happened over here. Can everybody see the trend indicators change from red to green? Okay, live chart. We could have bought the market there and just traded it all the way up to the top of the jar. Okay, so couple of interesting little things going on there, guys. So again, live chart, and I know I say this a lot, guys, but live chart is absolutely nowhere to hide. Kind of like it like that. Not that I'm competitive, guys, but we will win this. There's no question. So guys, the buy switch trade almost always occurs, as I said, in seller step number 2. Guys, if in doubt, the sellers must have the stair step in favor to gift you a high probability buy switch trade. So what we're once again doing is we're saying to the market, you generate the signal, and then I'll trade it. So ultimately, market, it's your responsibility if something goes wrong here. Now, mind you, guys, let me put that into context if I can. In the futures trading game, of which I'm a futures trader, the reality is there's 2 teams. It's buyers versus sellers, and the stronger team has to win. Now, if you're coming to us for a Forex trading background, for example, the Forex trading game is slightly different. So futures trading game is buyers versus sellers. There's 2 teams, and the stronger team has to win. Whereas the Forex traders are coming to us from an environment where you've got buyers versus sellers versus the broker, and the broker controls the price of the market. So guys, when I talk about futures trading being super accurate and very, very deliberate and very military, if you will, futures trading is very, very accurate because there's only 2 teams. Okay, now for those of you that have followed me for a while, you know we love the saying, identify the team that's failing and join the other team. Now, the reason we can do that is there are only 2 teams. So what I do, guys, in principle, I might make it look simple, but what I do in principle is in fact very, very simple. Okay, that's why we can trade so accurately. Now, guys, the best buy switch trades rely on key signal ingredients to perform at very, very high strike rates. So if you want to run it close to 100% strike rate, guys, which I try to do every day, we did that in the live trading room again today for the NASDAQ traders. Guys, if I didn't trade the opening candle of the FDAX, we would have also run at 100% strike rate on the FDAX as well, and 100% strike rate on the S&P. So it is possible. Guys, these are the things we're looking for. So the signal, the buy switch signal, guys, will always be traded with the step of the market. The signal is always traded off a candle that closes outside the range of the previous candle. So guys, in my live trading room world, that is called a CORPC candle. What does that mean? It closed outside the range of the previous candle. Saying CORPC just saves me saying that about 20 times a day. Right? So we want the candle to close outside the range of the previous candle. Effectively, what we can do is we can then use that candle to do a Fibonacci projection as a target estimator as to how far the market's going to go. Now, the beauty of Fibonacci, guys, if it's a volatile day, Fibonacci is going to tell you to go for a bigger target. If it's a quiet day, Fibonacci is going to tell you to go for a smaller target. Once again, we are saying to the market, you tell me where to get in and you tell me where to get out, and I'm literally just going to do what I'm told. I'm going to be very, very military about this. Guys, the 4th one down there, the signal must have resulted from a trend change or a bias change in the market, so you can be confident that the rest of the world agrees with you. And finally, guys, the signal works perfectly, or I should say works in perfect combination with the reversal trades we discussed last week. Okay, so normally what will occur is, as per the rule of 3, which we did a number of webinars ago, you'll end up with a reversal signal, followed by a bias switch signal, followed by a trend continuation signal. Now, guys, we're doing trend continuations next week. That's our subject for next week. So chart familiarization, guys, I wrote this chart on the 21st of May. So today is the 23rd of May. And now what we'll do is we'll do a static chart work through. We'll do a static chart work through, and then we're going to do a live chart work through. Now, this chart is from 2 days ago, guys. It is from the US pre-market. So the reason that I did this, guys, we've got traders around the world that want to trade the US pre-market. We've got traders that want to trade the US Open. We've got people that want to trade the European Open. So what I thought I'd do in the webinar is I'd show you the European pre-market and European Open on a live chart, and also show you the US pre-market, US Open from a couple of days ago. So not only you walk away from the webinar saying, right, so this is not just a European Open thing, this is every trading session in the world, correct? But I wanted to show you multiple days, so you can realize, well, it's not just a case of Lockie got lucky today. Okay, it's not about that. It's about a very, very deliberate mechanical way of pulling the market apart, which is ultimately what we do. Now, as a quick familiarization, particularly for those people that are not already with DOURO, that is our trend indicator. So effectively, when it's red, we want to be selling the market. When it's green, we want to be buying the market, particularly if you are trading with the trend, right? We're trading with the trend and the step. And that's exactly what you're going to be doing as a buyer switch trader. Okay, now this thing here, guys, we've got these big horizontal lines across the screen. They're basically what we refer to as DOURO pivots. Now, I just want to warn everybody out that our pivot file, so our little lines that we've got there on the chart, are different from other trading schools around the world. Now, our pivots, so the pivots that we use are actually what we call a pivot file. Whereas our levels are directly from the professional banking sector in Sydney, Australia. Okay, now, again, that was in 2007. I was using these pivot levels. I'm still using the same pivot levels today, and they still work today. So just make sure if you're going to be trading with pivots, just make sure your pivots are effectively in the right spot. Now, on the left-hand side, guys, it's a target indicator. Basically tells us what target the junior traders should be looking for when they first start trading. Guys, over there on the right-hand side, your price. Okay, so the price of the market we're trading. Down the bottom, you've got volume. As you'll see that some of my red candles turn orange. So that's an extreme volume candle. It basically says just be a little bit careful because the sellers are basically spending too much petrol. So literally using too much volume trying to push the market down. Whereas we've got orange ones and we've got the mustard green ones as well. Okay, so mustard green basically says the buyers are pushing too hard and the orange says the sellers are pushing too hard. Okay, now what I want to do, guys, I want to draw your attention not only to the start of the US pre-market, but I also want to actually talk about what's happened in that black circle because a phenomenal thing has occurred. Okay, now let me build it for you. So please note, guys, please note all the way up the top there that the trend has changed from green to red. Okay, so can everybody see that literally over the, you can probably see my mouse move around here. Everybody see on the left-hand side, we're basically stuck in this uptrend. Now, how do we know we're stuck in an uptrend? Because the indicator is green. Now, the moment it turns red, we know that the emotion of the market is changing. We know that the buyers have lost control of the market, and it's only a matter of time before the sellers show you how good they are. Now, the moment the sellers show you how good they are, this is when we want to think about entering the market. Now, interesting point. As I read the comment there, please note the trend has changed from green to red. So this means that the sellers are changing the bias of the market from a buying bias, where the buyers are having a ball, to a selling bias where the sellers are about to get even with the buyers. Because again, this is just a competition between two teams and the stronger team ultimately has to win. Now, that actually brings up a great little teaching, guys. If the trend has gone from green to red in the case of this indicator, what it ultimately means is the buyers have given up or the sellers are way too strong. Either way, we identify the team that's failing and join the other team. If the buyers have given up, we want to be joining the sellers. There are only two teams. Now, let me build it. Let me build it for you guys. That little red triangle there, what I've done is I've put that actually above the candle that is clearly closed. Would everybody agree that that candle is clearly closed outside the range of the previous candle? Like it's completely clear of the previous candle. That's when the sellers are telling you we are definitely taking control of the market. Now, what I do want to point out, guys, the candle before also closed outside the range of that big orange candle. All right, so not only is the orange candle switched the trend, otherwise known as a trend change or a buyer switch trade, not only is the orange candle switched the trend, but we are not allowed to trade into those brick walls called the pivots. So what does it mean? As we've literally got to wait for the candle to close over the pivots and then go short, or then basically sell the market. Now you can see what the response to the market was. Guys, an incredible sell down over about an hour and a half, which went for the NASDAQ traders, guys, hundreds of ticks or thousands of dollars into profit, thousands of dollars. Now I'll show you on the live chart how to deal with that. Now you could have got in, guys, you could have sold the market underneath the candle with a little arrow on it, or you could have sold on the candle before. What is most important is you've waited for the trend to change. You've waited for the sellers to confirm they're definitely interested, and then you've got into the market. Okay, now I do want to highlight a point. Guys, now this exact candle, can you everybody see there's a little number 1 sitting above this candle? Okay, so we have effectively, you could call it a cheat code running behind the market. we've got a little cheat code that basically says this is where the sellers are definitely taking control. Please go and take advantage of it. So basically, the strength rating of 1 confirms the sellers globally agree with the fact the market is turning. So guys, it's a great opportunity to sell the market, and effectively, you're ideally going to be selling the market and waiting for those 3 selling legs. Guys, and have a look at what we've got. Got selling leg 1, then you've got selling leg 2, and then you've got selling leg 3, all the way down to the US Open. Phil, it is. So that's a great question, guys. Phil's question is, Lockie, is the red arrow, I know it's pretty big and obvious, is the red arrow part of the new indicators? So the red arrow, mate, the red arrow picks on 4-point turning bars, Phil. So again, Phil, I'm not going to give you the answer on that one, but have a look underneath the little red arrow and you tell me if that's a 4-point turning bar. And you'll probably go, you've got to be kidding. Now, for those that are not aware of 4-point turning bar, Phil's in my live trading room, guys. The 4-point turning bar is one of the strongest reversal signals in the world. Now, mind you, this is the NASDAQ from 2 nights ago. May I suggest it probably went pretty well. Now, in saying that, guys, there's 2 trend changes on the chart. Okay, there's 2 trend changes. So if we come all the way over to the other side of the chart, can everybody see the second black circle that I've just put on the chart? Now, if you're looking at this saying, all right, Lockie, so all we did to sell the market is wait for the trend to change, wait for the sellers to confirm, and then we got in. You are correct. So we would do exactly the opposite to go the other way, right? So let me show you what I mean by that. So 2 little red circles coming on. Guys, now, the first red circle, or the most left-hand red circle, what's actually occurred is the buyers have literally pushed up. They've closed a beautiful, strong, you can see it's a 1-rated candle there. They've closed a beautiful, strong candle. They've turned the trend green, but they've only just closed outside the range of the trend indicator. Okay, now, interesting point, as we enter these buy signals, so we enter these buy signals above the green candle. So what actually happened in this case is the buyer said, hey, you know what, we're thinking about changing the market. So if we put our buy order above that green candle, we never got picked up and the market actually fell away again. Interesting point. What then occurred, second right time, they basically come back through again. They've confirmed they're owning the market. Let me put my little comment on here. Guys, so please note the trend change from red to green. This means the buyers are changing the bias of the market from a selling bias to a buying bias. And you've basically got 2 candles there to focus on. Emma, everybody can see my screen. Emma's saying that she may not be able to see my screen. That is what I'll do, Emma, I'll reshare the screen again. I'll reshare, which might actually give your no. Emma, it's very hard to learn if you can't see. Okay, so everyone can see, Emma. So I've reshared that for you. You might find that gives it a little boost, and and Emma, everyone knows who you are, so they'll be rolling you in the webinar tomorrow, in the live trading room tomorrow, guys. It's pick on Emma Day. No, it's not. It's not. Now, so what we've got is we've got these 2 red circles I've put on there. Now, the reason I focused on both of those is both of those candles, I remember what I said before, they've both closed outside the range of the previous candle. Okay, they've closed outside the range of the previous candle. Now, you've got this little candle hiding in here, guys, that's got a 13 strength rating. So see the right-hand green arrow, guys? So the left-hand buy trade was a strength of 1. The right-hand buy trade has got a strength of 13. So have a look at what occurs when the market produces a 13 rated candle that is also a bias switch trade. Okay, now have a look. The market's actually cruised up really, really nicely. I've put the little red circle around the candle after the 13 rated candle because I needed to make sure the candle closed beyond the previous candle, so outside the range of the previous candle, before I then said, right, the trend is definitely changing. I'm onto this and off we go. Now, as it turns out, it's obviously gone significantly in your favor. So what does it mean, guys? 2 nights ago, exactly right, Anne, a CORPC candle. Now, 2 nights ago was what it means if you traded the US pre-market You could see that the market had been trending up for ages. So you said, you know what, I'm pretty lazy. I'm just going to wait for the buyer switch and then I'll sit on them for as long as I possibly can. The US market opened. They decided we don't want to go down anymore. We want to go back the other way. So what you've done is basically said, you know what, I'm a lazy trader. I'm just going to wait for the trend to change and then I'll get in. Now, what's the deal with doing that? Is you've ended up with two absolutely stunning winning trades. You've got on the right side of the market both times. You've been able to go in a trade with the risk to reward ratio. In case of the left-hand trade, the risk to reward was 30 to 40 times in your favor. Okay, on the right-hand side, the risk to reward was around about 3 times in your favor. But either way, as you've walked away from the session going, giddy up, this is fantastic. Now, I wonder, guys, I'm looking at the clock. Could you have traded it based on the entry above? You could have, Kay. So if you put your entry above the 1 rated candle, you didn't actually get picked up for around about 25 minutes later. So 100%, Kay. You can leave. In fact, Kay, you know what? You've asked a question that's about to release Pandora's box here. If you get a valid, ladies and gents, it doesn't matter what you're trading. It could be CFDs, could be Forex, could be crypto, could be anything along those lines. It doesn't matter what you're trading. If you get a valid buy signal and then you get no valid sell signal against that, the buy signal holds. So, Kay, your question is such a great question, right? Because basically on that left-hand green arrow, we got a buyer switch long. Now we enter outside the range of that candle, but we never got a valid sell signal going back the other way. So the market basically said, look, I'm going to buy, but I'm going to take 5, 10, 15, 20 minutes to confirm I'm going to do that. And once I buy, I'm probably going to go long, goes for at least 20 to 25, 30 minutes. And look what it's done. It's gone beautifully. Now, I want to context that. So that's a graphic from the 21st of May. What I want to do is I want to bring up a live chart. Now, this is where we were tinkering before. Now, I do this on purpose, guys and girls, because this is where the rubber basically hits the road for me. Now, again, I'm going to sort of do a quick, Ahmed, your reversal trade is looking absolutely amazing. Holy moly. No. Wow. Okay. Isn't it exciting, guys? Well, it's exciting for me. You know, some of you may or may not know that I also lecture, guys. I also lecture at university on how to do this, guys. So I lecture, guys, at Edith Cowan University in Australia at the Masters of Applied Finance and Investment. And I actually lecture in Forex trading. And the first thing I tell them to do is don't trade Forex, trade currency. And this is this is the difference. Even the head lecturer is like, I didn't know there were 2 currency markets in the world. And so of course there are 2 different currency markets in the world. Now, guys, so let me context this for you. So here is the European Open from today. Okay, so there's the European Open from today. So that's 4 p.m. Guys, that's 4 p.m. Tokyo time. All right, so let me just write on here for you. That's the Euro Open. Okay, that's the European Open just there. Now, the beauty of the European Open is this is where I ran my live trading room today. So we picked up to 5 trades, Don't really need to go through those in detail tonight, as other than I want to talk about that little square there. We're going to get rid of the stair stepping over here. We're going to get rid of the stair stepping. Okay, so get rid of all this other information we put on there. We know about the hourly turn. In fact, guys, I'm going to put a label on that because the hourly turn is the chicken dinner winner. Some of you are probably going, what did he say? I said chicken dinner winner. That is one of the most reliable trades I've ever seen. Now, subject for tonight is bias switch trades. So even guys, even if you're brand new to the webinar series, even if you're brand new to what we do, all right, let me expand this up for you. What we're looking for is we're looking for a trend change. Okay, so Emma and Ahmed are now having a discussion about who's using the biggest targets on that trade. That is really good, guys, to have trades run. The market will run, there's no question. So what I want you to do, guys, even if you're new to trading, okay, have a look at this little square over there on the left-hand side and just tell me one thing. Well, you don't have to tell me, it's a live webinar. But my point being, has the trend changed from green to red? Now, I could, when T. Harv Eker's always on stage, he said, in fact, I'd go for 19,000, Phil. Absolutely, I'd go for 19,000. Absolutely correct. So when T. Harv Eker, guys, whenever he's presenting on stage, he'll say, now he doesn't talk about trend, of course, but in my case, let me put my T. Harv Eker hat on. He would say, has the trend switched from green to red? Yes or yes? You have no choice, right? Now, what we're looking for, guys, what we're looking for when the trend changes is we're looking for a strong candle, all right? We're looking for a strong candle that closes outside the range of the previous candle. There is one, and there is another one. Now, note here, this one has a strength rating of 1. That one has a strength rating of 1. Either one of those is successful. Either one of those is acceptable. Okay, there's no question about that. Now, what does it ultimately mean, guys? And in fact, great question from before. This one here is a really, really strong little buy switch candle. Now, our entry, guys, was placed underneath the candle. So what never occurred, guys, if I blow this up for you, what never actually occurred is we never got picked up on the buy switch trade until 5, 10, 15 minutes later. Now, what did I say before, guys? If you've got a really, really good signal, like a great sell signal in this case here, if you don't get a buy signal against that, then your sell signal stays in place. Now, in the case of a buyer switch, guys, in the case of a buyer switch trade, okay, our risk, our stop loss would be sitting over the top of the stronger candle or the larger candle. All right, so this is our risk on this particular trade. That is our risk, and that is our potential reward if we just want to go for 1-to-1. So if we're just going for a 1-to-1 risk to reward ratio. But the key point about that is you could have quite happily reduced your risk as we rolled through. Okay, now, what does it ultimately mean? That's what I'll just run you through it. So we've been filled on the trade here. The market has actually tracked back against us, but our stop loss, so our stop loss is sitting up here. Okay, so it's got nowhere near our stop loss. It's wound back down, bumped into a Fibonacci, wound, eventually has cruised down and got all the way down, goes all the way down through the profit target and significantly more. Now, what I love about this is this is the European pre-market from this afternoon. So this is a live NASDAQ chart, as no doubt you are aware. So what's occurred is we've picked up a buyer switch as per the teachings. We've picked up a buyer switch on the left-hand side. You can see the green to red. We picked up a signal. We know where to put our stop loss. We know where to put our target. And effectively, the market's just cruised down quite happily. Brings up a great little teaching. Guys, this yellow box I'm moving around the screen is worth $100. So most of my traders just want to make $100 per day when they start. So effectively, they went short on the trade. It took 5, 10, 15, 20, 25, 30, 35 minutes. So around about 35 minutes, guys, in order to earn $100. Now, that raises a great question, Daniel. That raises a great question. So we come into the European Open, guys. We come into the European Open, and I'm going to move my box over here because straight away you can see the trend has changed from red to green. Okay, the trend has changed from red to green. So you're saying, righto, Lockie, where's my buyer switch trade? Right, so what we're looking for, guys, is a candle that is closed beyond or outside. It's got to close outside the range of the trend indicator and also close outside the range of the previous candle. So what have we not got here, guys? What have we not got there? We actually don't have a buyer switch trade. So the candle's got to close outside the trend indicator. Exactly right. But guys, in saying that though, let's say we're super keen. Oh, Lockie, I'm waiting for my buyer switch trade. Oh, you know, the buyers are amazing. Da, 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 da. This might blow you away. Have a look. So how many phases does the market move in? Okay, so you got buyer phase 1, buyer phase 2, and then you got buyer phase 3. So does the market normally move in 3 phases? Absolutely. Do we get our buyer switch trades in phase 2 or phase 3? Who was listening before? We always get the buyer switches in phase 2. Now, interesting point. If you forgot that, you're like, oh, Lockie, that kind of stuff doesn't matter. It's like, okay, no, that's all right. Doesn't matter. But what I want to do, guys, what I want to do is I want to ask you a question. You've got 3 buying phases. We know the market moves in 3 phases. And the buyer switch, the green, the buyers could not change the trend. So if the buyers can't change the trend, who should you be trading with? And guess what that little red candle is right there? Let's guess what that little red candle is. Some of you know what that is. It's a reversal pattern short. And look at that. Look at that. So interesting point. We never got the buyer switch long. Okay. So what did we get here? What did we get? What did we get there? Hold on one second. Hold on one second. I did turn my phone to silent multiple times, and yet for some reason, it's just gone off. That's actually, guys, that's actually one of the prop traders calling from America. All right, so I'll go and call them shortly. But my point, guys, my point being is this: if the trend can't go up, so the trend has changed green, it then changes red. Oh, hang on a sec. So, Lockie, did this massive red candle close outside the range of the previous candle? Yes. Did the trend change from green, yes, to red? Yes. Right. So could we, in principle, have sold the market down here as a buyer switch trade and pushed it down to the close of the hour? Yes. Awesome. And if I grabbed my $100 box, which is the smaller one, and asked the question, could I have made $100 on that bias switch short? Good question. So we needed to go to the bottom of the box. So 5, 10, 15, 20 minutes later, it's gone through the bottom of the box. So far on the chart, guys, we've got a buyer switch short that has worked, and we've got a buyer switch short that has worked. Now, there's many other signals here, guys. There's reversal trades and all this kind of cool stuff, but tonight's about buyer switches. Okay. Now, interesting point. What occurs again? I'll grab this little box. As the trend changes green, note up here, there are no candles that have closed outside the range of the trend indicator. If they don't close above the trend indicator, there's no buyer switch. So you wait for the buyer switch short, which is right there, and push them back down again. Interesting point. They're selling down into the hourly turn, then the market turns and goes back the other way. But suffice to say, at this point in time, there are 3 buyer switches in favor of the sellers today. As per the algorithm that I'm giving you, there are 3 buyer switches, and every one of them has actually gone to profit. So what strike rate are we talking at this point in time? Pretty high strike rate. Now, for those of you going, all right, well, Lockie, this is kind of good fun. What happened over here? As you tell me what happened over here. Let's have a look. So would everybody agree, as I get rid of the yellow, would everybody agree that the trend has changed from red to green? Everyone changed okay, we've changed from red to green. Perfect. So then you're looking for a candle, guys, that's changed the trend, that is closed outside the range of the previous candle. So would everybody agree that that has occurred? I'm going to get rid of all these arrows so we can be super clear, guys, because I'm cruising through time real quick. Can everybody see the trend has changed here? That not only has the trend changed, it's gone from red to green to, it's gone from red to gray to green. Gray means the market's got no personality. Green means it's got the personality back. So in this case, guys, if you wanted that buyer switch, okay, so finally we've got a buying buyer switch. We're entering over the top of the candle. Our risk is below the candle, okay, and we want the market to go up. And in this case, we want it to go up, and we want it to pay $100 target again. So you get in the candle, 1, 2, 3, 4, boom, straight through your $100 target again. So far tonight, guys, just on that formula alone, forget all the other things on that chart, you've got 4 buyer switches in a row. Okay, now I know, so 4 buyer switches in a row, and every one of them has gone over the $100 target, which is a beginner trader's KPI. Now, I want to show you guys, I want to show you what's going on here because this is really exciting. We did this last week. Okay, we did this last week. So those of you that were looking for the turn in the market, right, the turn in the market after 1900, all right, or 7 p.m. Exactly right, Jeff. Jeff's like, oh my God, that buyer switch has happened in leg 2. I said, yeah, just like the other ones have all happened in leg 2. Or the sellers have just basically, yeah, you're right. I'm just going to say, mate, you're 100% correct. Leg 3 rule, does it count the 60-minute charts too? Yes, it does, Emma, 100% correct. 100% correct. Now, guys, everybody can see this is a live NASDAQ chart. I just want to share something with you, which is, to me, is just so exciting. Oh, it's just so exciting. Is this the buyers own the stair step? Right now, we did this in a previous webinar. Okay, so the buyers own the stair step. They're running up absolutely beautifully. Everything is wonderful. And then the sellers sell down. And guess what they do? The sellers break the buyer's stair step. Now, the beauty of breaking the stair step, right, the beauty of breaking the stair step is the sellers now own the stair step. So what are we looking for? We're looking for valid reversal patterns long, like this one here, or we're waiting for the buyers to retake control of the market. That's that candle there. And then we're going to buy above the top of the candle right there. And then we're going to sit on it for as long as we possibly can. Now, guys, I don't want to be rude, but here's your $100 box again, and it goes above that candle. So that signal there is now more than $300 US into profit while we were sitting in the webinar. And you know what that signal's called? Guys, that signal's called an MDI, or trend continuation trade. And guess what our subject is in next week's webinar? Trend continuation trade. So what you could, so let's fast forward to next week. But what you could get, guys, what you could get on a typical NASDAQ day is you could get a reversal signal, followed by a buyer switch signal, followed by a continuation signal. Or you get a reversal like we've got there, followed by a second reversal, followed by a continuation, and boom, off we go. It's quite exciting, guys and girls, because guess what that means? Guess what that means? I'm going to delete that Fibonacci that's on my chart because I want to show you something. Guys, guess what? Guess what? Guess what? The NASDAQ in our webinar tonight, after that reversal signal, has just gone and broken its all-time high. This is the highest the NASDAQ has ever been. And it's in our webinar after Ahmed got a reversal signal off that little candle there and decided to run the market up. So my question, Ahmed, how far is this going to go? Fibonacci says it's going to go a little bit further. What I would suggest you do, in fact, I'll tell you where Fibonacci says it's going to go, right? Not being rude. It's going to go to the 141.4 fib extension. It's going to go right there. Wouldn't it be funny if that happened in the webinar? So, guys, I'm over time. I'm 2 minutes over time. What I would love to know, guys, that little green line there is the all-time high for the NASDAQ. This is the highest it has ever been. What I would love to know is what is the #1 lesson you've learned from the webinar today? Guys, you've got about 2 minutes maybe to give me the #1 thing you've learned out of the webinar today. If I was on the other side of the fence, if I was on the other side of the microphone tonight, I'd be saying hourly turn, buyer switches, 3 steps and a stumble, and aren't those little candles really sexy? That's what I would be doing. CORPC, I love that. Love that buyer switch, Suzanne. Welcome to the buyer switch. The hourly turn rate. I mean, there's 4 of them in front of us, and there's 4 of them. It's becoming my favorite trade. And there's no question about that because it's so simple. So the hourly turn, we've got buyer switches, we've got CORPC, we've got, okay, lots of stuff. Okay, brilliant. So as I do with all of these webinars, I want to massive thank you guys to the Trading Pit. Okay, massive thank you to the Trading Pit. Ahmed's just, yeah, it's Ahmed's shout. Ahmed, your shout, man. So huge thank you to the Trading Pit, guys, for an absolutely incredible webinar. Thank you for having me, guys. This is webinar 5 of a 9-part series. I do hope that you are enjoying the series. And again, thank you to the Trading Pit for having me. Very much appreciated. I love to be hanging around professional traders. So, guys, thank you. And I will see you next week. How about that?
Thank you very much,
Perfect.
Loki, for your time. Thank you very much, everybody. Have a good rest of the day.
Okay. Bye-bye, guys. See you soon. Bye-bye-bye.